We have dealt with liquidity ratios. We have dealt with quick ratios, activity ratios, debtors ratios, creditors ratios. Now you want to understand something called sales to fixed asset ratios. Sales to fixed assets ratios. These ratios indicate whether the trading value of the firm is large enough to justify instruments in the fixed assets. If it is less than one, it means that it cannot justify future investments of that of its assets since it is less than one. But if it is more than one, it is going to justify that it is going to increase in future. In the future, investments is going to increase in future if it is the ratio is more than one. But if the ratio is less than one, it justifies that it is not going to have greater investments in future. So now when you want to deal with sales to fixed asset ratios, you just say sales over fixed assets. That's very simple. Sales over fixed assets, and you get the ratio itself. The ratio you get, it means if it is one, then it justifies. If it is less than one, it does not justify for investments in future. Now this is what you call assets turnover. The other one was stock turnover. Now we are dealing with assets turnover. When you are dealing with assets turnover, you are dealing with revenue ratios, or what you call capital ratios. So when you want to know about assets turnover, the total number of assets you have, the total when you have done all sets of assets after selling land, cash, debtors, those you have known that you have the total number of this in your assets. Now you want to know this assets turnover, whereby you say it is the number of sales you had all over the net assets. The net assets is the total assets minus current liabilities. When you want to know, if you want to know the net assets, you just say total assets minus current liabilities. Total current liabilities. So you want to know total assets minus total current liabilities, and you know that it is balanced, whereby they should be balanced. You want to know the total assets you have. You have this asset, this, and you know you have current liabilities like this and this. You just do net assets by minusing them. So now, if you, for example, if you have it and you can see the ratio comes to be more than 1.1, 1.2, 1.3, it means that the ratio of asset turnover justifies good idea. It's an idea of investments in that. And if it is 0.9 and below, it means that it does not justify for investments in your company. This is what you call financial analysis. You consider how you analyze the ratios you have. The ratio determines on how you analyze the finance, the finance statements, the financial status of your firm.